I'm about to show you how to avoid two common tax mistakes that I see business owners make, especially when they're just starting out. Those mistakes are not setting aside any money for taxes and setting aside way too much money for taxes. People who make the first mistake often end up being absolutely shocked when they finally get their tax bill, especially when they owe more in taxes than they have left in the bank. On the other end of the spectrum, some folks save way too much money for taxes and leave cash sitting on the sidelines when they could be putting it to use. I hate seeing people get tripped up by bad systems, and I want entrepreneurs to make good financial decisions so they can solve the big important problems in the world. It takes a reliable process to avoid these opposing mistakes, and the one I'm about to share with you is the same process that I use when I take on a new client. Here's what needs to happen. First, sit down and run some tax projections to see how much you'll owe based on the income you expect your business to generate. If you aren't sure how much money your business will make, run multiple projections based on the range of profit that you're expecting and make note of how much you'll owe in taxes at different levels of profitability. Next, determine your core tax strategy and figure out which tax planning opportunities you should focus on implementing so you can take money that would flow through your hands toward taxes and redirect some of that resources towards more productive uses, like growing your business. At this point, I find it helpful to run some more projections and compare the total expected tax owed in step one to the total expected tax after implementing your core tax strategy. I know, nerd alert, but this step should give you an idea of just how much return on investment you'd get from tax planning, or if the juice is worth the squeeze, as one of my clients says. Once you've gotten to this point, you should have a realistic idea of how much of the money that your business makes will be yours and be able to budget for making your tax payments to the government. The next step in the process is to monitor your progress throughout the year and update your projections based on how things are actually going. Did you project taxes based on $80,000 of profit, but realize you're on track to make $100,000 instead? Great. Plug that higher figure into your projections and update the amount you're setting aside for taxes. How often you should update your projections depends on your specific goals and resources, but in general, the more revenue your business generates, the more often you should be taking a look to keep things on track. The final step for 1 year is also the first step for the next year. Before you send in your tax returns and claim your refund, or pay the balance due that you've been planning for, compare the numbers on your tax return to what you projected and make sure you understand what caused any big differences so you can improve the accuracy of your projections going forward. You may not hit the nail on the head the first time, but if you follow this system, you should get closer and closer each year. The goal isn't to be exactly perfect, but to get close enough to make good financial decisions with a reasonable amount of time and effort. Here's how we use this process for one of our clients who owns a professional services business. We ran some initial tax projections and figured that without making any changes, he and his wife would owe about $41,000 in taxes to the IRS. Then we compared those projections to what they would owe after implementing a core tax strategy that made sense based on their situation and determined that there was likely at least $6,000 a year in tax savings to go after, and it was worth the time and effort. My client used those projections to make estimated tax payments throughout the year, and here's how it ended up. His business made more money than we projected. Their taxable income went up by more than $30,000 compared to the previous year, but their total IRS tax actually went down around $6,000. That core tax strategy saved them over $10,000 in the first year alone. If you choose to go through this process, the first time will probably seem difficult, but pushing through that initial discomfort could be the key to unlocking access to thousands of dollars a year that you can use to do things like pay other people to do the things you hate having to do in your business, say no to bad customers who create headaches and cost you money, take time off of work to recharge with your friends and family, and build up an emergency fund or opportunity fund or savings that you can tap when you need to. If you don't go through a process like this, it'll be really easy at first, but you can only ignore taxes for so long, and that gut punch from the IRS that so many business owners experience in April only hits harder if you pretend it's not coming. You could get sucked into that vicious cycle where you have to work longer and harder each year just to pay the taxes, penalties, and interest from the prior year. How long can you do that before you feel trapped in the business that was supposed to free you, stuck doing work you can't stand doing, before your relationships with your customers, your friends, and your family start to suffer? How long do you want to do that for? My path to a CPA license wasn't the traditional track of grinding out audits and tax returns as an anonymous cog in a Big Four accounting machine. Instead, I came up through the corporate accounting world, solving accounting and operational problems that nobody else had the desire or ability to solve. I love how entrepreneurs see problems in the world and then create businesses to solve those problems. I started preparing tax returns over a decade ago because I hated seeing small business owners getting dragged away and distracted from their life's purpose just because it was so hard to get a good tax return filed each year. After working through a few thousand tax returns, I noticed patterns starting to emerge. I kept seeing similar mistakes and missed opportunities, and I couldn't help wondering why. What I realized is that the way things had always been done was too reactive and too focused on the tax return as the end goal. The whole system was designed around big accounting firms working with big companies with big internal accounting departments, and it wasn't working for people who were striking out on their own to start something new. Clients weren't telling me about taxable events until well after they had already happened, and it was too late to offer the advice that would let them direct more cash towards their goals instead of taxes. It wasn't their fault, just this whole legacy system trained them to only think about taxes once a year when it was time to file the returns. I couldn't take it anymore, and I decided to radically change how I work with my clients. I set out to get closer to our clients, to deliver relevant advice before the decisions are set in stone, to prioritize the advice and coaching, and view the tax return as just one part of a feedback loop that drives continuous improvement instead of making it the end goal. Now, the business owners I've seen over the years tend to be either one of two types. The first type is proactive. They take responsibility to learn what they need to know and implement the necessary steps to make progress towards their goals. The second type is reactive. They do things like rely on hot tips from friends and relatives and random social media influencers that might not work out in their situation and could be so flat out wrong they end up in trouble with the IRS. They just want to skip the planning and hope there's some magic button to press that can take all the taxes away in April, and then they're shocked every year when that doesn't happen. I only accept new clients who want to be proactive, who are willing to sit down and commit to our planning process and to learning and implementing sound strategies instead of gimmicks or hacks. At first, it's harder than not planning, but after you start seeing results, it makes everything easier going forward. If you're like most of my clients, I don't think you'd have it any other way. When I rolled out this new process, we instantly started seeing some much better results for our clients, but it wasn't perfect. We took on a lot of extra work and complexity to make things easier, and I didn't quite have the right tools and systems in place to stay as close as I wanted to be to our clients' decision making during the busy seasons that happen near the major tax deadlines. Since then, I've invested significantly in the tools and systems we use, built up our capacity and training our team, and it shows. If you want to use tax savings to accelerate your business and reach your goals faster, this is the type of planning process that successful entrepreneurs use to get there. Does it all sound like a good idea, but you're not sure if you can pull it off by yourself, or maybe you're a bit nervous about the cost to work with someone like me, and if the benefits of that outside perspective would outweigh the cost or not? To find out, you can book a free tax-confident consultation with me on Zoom. I'll block off up to an hour of time on my calendar for you, and together we can try to hammer out a high-level plan to get you from where you are now to where you want to be 6 months from now. If you're self-employed or own your own business and you haven't quite cracked the code of what you need to be doing in order to avoid the stress and uncertainty surrounding taxes, you'll walk away from that meeting with a better understanding of what to focus on right now in order to make progress towards your goals. And there's no obligation to buy anything from me or work with my firm, but if you decide that you would like my team to help you implement any ideas or strategies that we discuss when we meet, then we can talk about what that might look like. But I'll only do that if I'm confident we can help you. If I don't think that what we're good at matches up with what you need, or I don't think that we'd be a good fit for whatever reason, I won't take your money, and I'll do what I can to point you in the right direction. My standard billing rate for tax planning meetings starts at $300 an hour, but you won't pay a dime for this meeting. Here's how to book your very own tax confident consultation. Click the link in the description for this video to visit the booking page on my website. Click the booking button on that website and answer a few basic questions so I'll know a little bit about you before we meet. Once you finish that short questionnaire, you'll be able to see which appointment times I have available and reserve the time that best suits your schedule. After booking, you'll receive a confirmation email with a Zoom link for your meeting and a link to get back to my calendar in case you need to reschedule. About 10 minutes before your scheduled appointment, just click on the Zoom link from your confirmation email to open the Zoom app and make sure your audio and video settings are dialed in. I'm looking forward to meeting you and learning about your business and your goals. If you get stuck somewhere along the way or have any questions you'd like answered before committing to a Zoom meeting with me, please don't hesitate to reach out. Call 541-639-3598 or find us online at joshuajordancpa.com.